Expect Indian markets to open with a strong gap up of 150 to 200 points on Monday. This momentum is driven by a sharp drop in crude oil, geopolitical de-escalation, and a favorable new U.S. tariff structure. This chart compares Nifty 50's Friday close of 23,680 against the weekend gift Nifty move to 23,820. European and U.S. markets staged massive weekend recoveries, erasing 600 to 700 point deficits. Investors are pricing in a likely pause in Federal Reserve rate hikes. These global shifts, combined with weekend macroeconomic data, create a strong bullish trajectory for Monday's open. This chart tracks the decline of Brent crude, which peaked above $101 before dropping to $96 per barrel over the weekend. Prices dropped after Washington signaled a pause on massive military strikes against Iran. Maritime data further confirms that the Red Sea route bypassing the Strait of Hormuz remains open and flowing despite recent Houthi rebel attacks. Meanwhile, China has officially stepped in to mediate U.S.-Iran talks via Pakistani diplomats. The rapid drainage of this geopolitical risk premium directly lowers input costs and inflation expectations for the Indian economy. In trade policy, a new U.S. tariff update gives Indian manufacturing a direct competitive edge. This table shows a 10% U.S. tariff on Indian goods, lower than the 12.5% on rivals like China and Brazil. This spread lets Indian exporters undercut competitors, compounded by the UK-India FTA, projecting doubled exports to $115 billion by 2030. These policy shifts create a permanent, structural pricing advantage for Indian manufacturing supply chains. Despite these tailwinds, underlying institutional positioning remains aggressively bearish. This chart tracks foreign institutional investors holding 270,000 net short positions, betting heavily against retail longs. FIIs are positioned to defend the 23,820 resistance level, creating a risk of heavy selling pressure shortly after the gap up. Mid-week volatility will be dictated by the U.S. Federal Reserve's interest rate decision. Tuesday's White House meeting with Israeli Prime Minister Benjamin Netanyahu will likely determine the next major move in oil prices. Approach the morning gap up with caution and strict stop losses. Institutional short volume and Tuesday's geopolitical meetings suggest a high risk of sudden intraday reversals.